Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello, Namaskar. You're watching BTTV. This is Market Today. I'm Tanya Aneja and with me Shail Bhatnagar, our markets editor. Well, Indian markets continue to remain volatile, but where are the pockets of opportunities and what should be your strategy? We'll discuss this and much more. But first up, the top headlines for you. Indian stocks are likely to remain in a sideways trading band on Friday ahead of an extended weekend, even as the market remains smack in the middle of electioneering fever across half the country. In focus for the bulls will be auto stocks, PSU companies, sugar shares and fertilizer stocks as they build their positions on the long side in a market that's headed for a fresh highs. Very good morning, Shail. It's Friday finally, and we are heading into extended weekend. So it's going to be a great day for us and, of course, the markets. But if we talk about the action yesterday, Indian markets ended on a flat note, and Nifty was able to end above that 19,800 mark. But now let's understand from you that what should be the strategy for today, and where do you see Nifty?
Good morning, Tanya. A very, very warm welcome to you back to Delhi. Good to see you here, and especially ahead of Monday, which is also a holiday. So you get the weekend plus one more day off. And a very, very warm welcome to thousands of people who've started joining us from early morning onwards to get all the action that there is in the market. Let's start with the Nifty. As Tanya very rightly mentioned, we've managed to stick around to 19,800. It is still with the bulls. The Nifty remains at a 1 month high as far as the markets are concerned. And what's really interesting is that you see a lot of strong momentum already into the market as far as the index is concerned. Nifty, as you know very rightly, is up 4.8% so far in November, and it goes with enough strength into the December expiry, which is going to start on next Thursday. Now the issue is that somewhere on December 2nd, December 3rd, the results of all the 5 state elections that are underway at the moment will be known. So that is the reason why both the major indices at least are in a sideways to a consolidating zone, especially the Nifty. You've seen over the last 5 or 6 sessions, it's almost a flat trade on a net basis, although we see a lot of intraday volatility. But at the moment, 19,800 with a lot of strength remains with the bulls. And what's really interesting is that pockets of strength are getting better and better as far as markets are concerned within the Nifty. Auto stocks, we've seen yesterday record high on Bajaj Auto. You've seen a strong move coming on Hero Motors as well as Eicher Motors. Now the trend will shift towards four-wheelers, which is Maruti, which has a major event today. Tata Motors again is at a record high. So these are the stocks that are moving with strength. Pharma, apart from Cipla, has seen a lot of momentum, especially Sun and Dr. Reddy's. Then you have a whole host of counters which are providing strength. So this is how the Nifty is. Remember, today is also the last day for 5 IPOs that are open in the market to gather momentum. Tanya will of course tell you that Tata Technologies, the most favored of them, has one huge confidence from retail investors, and this is something to look forward to in the weeks that the listings will happen. So money is moving into IPOs, money is moving out of Nifty in a not exactly a major way and moving into cash stocks. As far as the options chain is concerned, very strong momentum seen at 19,800. This one is getting stronger and stronger for the bulls, so a very strong support here, and of course 19,900, 20,000 are levels for the Nifty, which show fairly strong resistance. Any dip towards 750, 800 will be an opportunity. Actually 750 and 700, 19,750, 19,700 will be an opportunity for players to get back into the Nifty, and Tanya will confirm in the early part of November when she was co-anchoring with me. We had talked about 2 ETFs, which is the SBI Nifty ETF and the Nippon Banking Bees. They are the ones for long-term investors to add at current levels and then probably rejoice a very strong up move, which is most likely in the month of December. Tanya.
Absolutely, Shail, and we did discuss that. And by the way, Tata Technologies created a record with 50.6 lakh applications, Shail. And liquidity is, I think, perhaps going in the primary markets, and that's why there's not much movement that's happening in the markets these days. But now let's coming back to the Nifty Bank Shell. This index also bounced back yesterday, and buying, with buying seen in key index heavyweights like HDFC Bank and SBI. And this index ended at 43,577 odd level. We have seen buying in Federal Bank, IDFC First Bank, IndusInd Bank, and this index is trading above 200 DMA mark as well. So what are you looking on Nifty Bank today, and what are the important levels to watch out for?
Tanya, absolutely right when you mentioned that the index closed above the 200 DMA. What is also interesting is that despite the 2.6% rise in the month of November, which translates to somewhere like 1,000 points, 1,050 points, the Nifty Bank has been categorized as a relative underperformer, and that's because the Nifty is up 4.8% and mid-cap Nifty, hold your breath Tanya, is up 10%. So this 2.6% uptick on the Nifty Bank pales into insignificance when you look at how the Nifty and the mid-cap index have performed in the past 22, 23 trading sessions. Given that in mind, you'll see a sideways to weak trend again on the Bank Nifty. Sakshi, I'm so sorry Tanya, the same reasons, an extended holiday, you are headed towards the election results, and of course the fact that you are at the fag end of the monthly November expiry. So we'll leave it as it is and focus on the cash stocks as far as markets are concerned, and then probably relook at the Bank Nifty on Tuesday when all of us congregate again on Market Today for the market wrap up. Tanya.
Absolutely, Shail, we'll do that. But lots happening in the future and option space as well. So why don't we discuss that? I mean, what are you looking at in the FNO space today?
Okay, so Tanya, I think the auto pack continues to gather a very strong set of momentums as far as traders are concerned, and the 3 auto stocks, Eicher Motors, Bajaj Auto and Hero Motors, are right there in front of my radar in terms of a strong uptick that is likely. And one more interesting thing, Tanya, is that while the trend will continue in two-wheeler stocks, again all of this is based on technical and chartical data. There are 2 more stocks, actually 3 more stocks that have emerged in the FNO space that are doing extremely well. The two chemical companies, Navin Fluorine and Deepak Nitrite. very, very sharp surge in volume accompanied by very, very high price action. So Navin Fluorine saw actually 5x volume in terms of futures. Deepak Nitrite saw 4x volume in terms of futures, and a commensurate rise in delivery patterns coupled with a very, very good price action. So Navin Fluorine 2.5% higher, Deepak Nitrite 3.1% higher in yesterday's trade, continue to attract fresh interest on the long side. And Aditya Birla Fashion Retail, this is something that we picked up, Tanya, in the dying moments of trade yesterday, 5.3% higher. The stock's been one of those underperformers and is now showing signs of revival. The delivery statistics are 3.5x, and this is how the cookie looks as far as F&O is concerned. 2 chemical stocks, 3 two-wheeler stocks, and 1 from the retail space. Tanya.
Okay, absolutely. So that was the F&O action for you. But now it's time to welcome our guest on the show today. And we have with us Mr. Mayuresh Joshi, who is the head of equity research at William O'Neill. Very good morning, Mayuresh. Always good to have you on BTTV. Mayuresh, we were discussing about the markets, and there's not much happening in the markets at this point in time, because I think liquidity is going in the primary markets, and record applications for Tata Tech IPO. But I want to understand from you that how are you approaching markets, and can we expect fresh highs in the month of December?
Morning, Tanya. Morning, Shail sir. Always a pleasure to be on your show. Two things. One, as you rightly pointed out, I think a lot of money is getting blocked into these IPOs. And look at the oversubscriptions that you're probably getting. Tata Tele almost 50x times. And all these issuances, as the allotments happen, I think a lot of this money is going to get released. So at some point of time in the coming week, you're going to see a huge amount of inflow coming back into the markets. At the same time, global cues are looking very, very supportive. I was tracking the macro data that came in from Germany yesterday. The PMI data is showing 4 consecutive months of uptrend at 42.7 is the last reading, which is indicating that the worst is probably over in terms of the manufacturing activity. And even in the US market, softening of yields and expectations of a strong bounce back, with expectations of rate cuts starting in the latter part of the next calendar year, markets have already started discounting that. India, anyway, is on a very, very strong footing as we speak, both from a macro and a micro perspective. And the China wars continue. So I think at some point of time, the FIs will have no choice but to come back and realign their portfolio allocations. Structural downside probably looks very, very limited for the Indian markets. Obviously, the hurdle at 19,850, where the market is probably facing resistance. I think it's a matter of time that is taken out. And once that's taken out, all-time highs is just a theoretical number.
Right. Good morning, Mayuresh. What a pleasure to always welcome you on Market today, and to listen to interesting points that you mentioned. German PMI is not something that I track, but if you say it's up 4 months in a row, we take it as something mentioned in stone. Let's look at how the markets are structured. Very, very strong rallies coming into two-wheelers, especially Bajaj Auto. A quick comment on Bajaj Auto from your side, and what are the levels or stocks that you are looking at to add in long-term portfolios at these current prices?
Morning, Shail sir. Again, pleasure to be on your show as always. For Bajaj Auto in particular, I think the troubles that emanated over the last few quarters, not the last 2-3, but the last few years, were obviously the export markets. And a large part of the realignment is probably in place as we speak. So a lot of concerns, both in terms of political developments in a lot of their export-oriented markets, along with supply chain concerns, are now largely behind us. And there should be normalization, both in terms of volumes as well as expectations in terms of the product mix. The domestic volume growth specifically should be reasonable as we head into the next few quarters. And that mix itself, both from domestic and export markets, along with the product mix, and a few more launches that probably get expected from the Bajaj stable on the EV mobile and platform business, I think that should hold it in good stead. Obviously, I think one will always argue for companies like Bajaj and TVS that valuations are probably gone through the roof as far as median averages are concerned. But I think it's a question of resetting on how the next few years look at. And therefore, I think it's a solid story that if one owns, should continue owning in the portfolios. As far as our picks are concerned, at Markets India, we continue to like a few names within the auto ancillary pack. Battery makers, Shell sir, is something that is evincing her interest as we speak. Within battery makers, Exide is something that we believe can be a good structural story going forward. Three things happening here. One, I think the expansion or the expectations in terms of capacity building for the lithium-ion battery business, 6 gigawatt hours for the overall capex of almost 6,000 crores, should be sufficiently serviced through internal accruals without having a lot of leverage onto the balance sheet. With a lot of efficiencies that are building in, we've probably seen EBITDA margins expand at 11.4% in the quarter gone by, with lead prices expected to remain benign and operational efficiencies kicking in. 11.5%, 12% can be a new normal in terms of the margins, which creates a huge operating leverage for Exide. And the third, the business model itself. Automobiles 75%, industrials 25%, within automobiles, OEMs is around 60 odd percent, which means a lot of demand which gets driven in as we transit from the internal combustion engines to the electrical mobility engines. Exide will have this transition placed beautifully, both through the OEM and the replacement markets, getting reflected in stronger ROEs as we speak. So I think we're looking at a 20 to 25% upside with a stop at 263 for Exide. The other structural story, similar to what we're seeing in terms of automobiles, is the power sector. And within this, I think renewables is going to be a huge theme as we move ahead into the next few years. CESC from the mid-cap space is something that we continue to like at Markets with India. Two things again. I think the core business of the Kolkata circle and the Noida circle, the numbers there are holding up pretty well. For Dhariwal in particular, kind of PPAs that they've signed up, the latest one, which was at 4.1 rupees per unit, is a significant addition in terms of the overall profitability. And then franchise units, both in Rajasthan and Malegaon, should start picking up. Malegaon particularly, I think it's a textile hub. And as things move ahead with FDAs expected to get signed and a lot of activity happening next year on textiles, FY24, the numbers should come back in the profitability figures, which means the overall consolidated number should be good, along with a dividend yield of 4.5%. It is not very expensive even as we speak, around 1 time price to book, which makes it even more.
Okay, absolutely got that.
Right.
And now it's
So
time for
these are
us
the
to
two
take a
stocks
short break.
that Mayuri
But
suggests.
we'll be right back. You stay tuned, lot more coming up on the other side.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. So I think now let's discuss sugar companies also, Shell, because these stocks were on a roll yesterday. And that was on the back of the expectations that prices would firm up on supply shortages in key states like Maharashtra and Karnataka. So coming to you, Mayuresh, for all these sugar stocks, I mean, any stocks that are on your radar right now?
I think the obvious names that crop up, Tanya, is going to be Balrampur Chini if you ask any fundamental analyst or somewhere to the extent of Adhampur or Triveni. But I think the whole structural story is now entirely skewed towards ethanol and their distillery operations. And that is how sugar companies have de-risked themselves from the core sugar model. Having said that, the expectations in terms of lower supply coming in specifically from the UP markets, which is the biggest state in terms of the sugar producing region, that might create a huge impact because as supply dwindles down, the carryover inventory for the next sugar season might be significantly lesser. What you've also seen in Brazil at this point of time, I think a lot of diversion is probably happening to ethanol, and weather conditions thereof has also ensured there is lower supply. I think sugar prices globally, both in terms of raw sugar and refined sugar, have gone through the roof. But I think this entire story is now purely skewed towards ethanol and distillery, where realizations are also far better. So I think Balrampur, Ampur, Triveni, the momentum can very well continue. The only risk factor that probably remains is with general elections around the corner, any increases in state advised prices or fair and remunerative prices at the center might actually dampen at least the sugar part of revenues and earnings for these companies concerned.
Right. Mayuresh, we'll also focus on Praj Industries. This is something that closed at a record high yesterday, and somewhere like 621 is the price that you see. Perfectly in sync with your thoughts as far as the ethanol story is concerned, a derivative of the entire sugar sector. Your views on Praj, of course, at record levels, but something on prices is something which we can't do.
Oh, absolutely. And I think we had discussed this a quarter back on the same show as a long-term pick. And absolutely, the story structurally continues, Shail sir. The 2G, 3G ethanol plants that Praj produces are going to be significantly value accretive. And it's not just for the Indian markets. They are also having a lot of export orders that are probably getting picked up. Now, the entire bioethanol story, the biofuel story, and the entire capex surrounding these themes, which have also got discussed at the G20 summit, I think a lot more orders will flow through. And interestingly, I think if you look at their management transcripts over the past few quarters, a lot of work is probably getting done in terms of a lot of new innovative products that are coming through. They're looking at a diesel binder. And imagine the kind of scale if they're able to achieve something like this very, very successfully. They're looking something in terms of mixing fuel as far as ATF is concerned. That can be a huge, huge value addition going forward. And going by their past record, I think even if they achieve partial success in either of these products or some of the products that they're intending, the earnings profile will take a huge, huge upside potential that probably can get reflected. And that probably means that any investor holding on should hold on to a stock.
Okay, so this is something that you need to look out in today's trade as well. Of course, Balrampur and Praj Industries were discussed in great detail in Thursday's closing show on Market Today. It's 8:59. We'll wait for the pre-opening ticks to hit our markets, which are right there in front of us. We'll just avoid the Nifty. It's a terrible number, and I'm very sure this is not something that you'll see on the screen. This is it being Friday, as also an extended weekend ahead, so trade will be thin. The Nifty is now 21 points lower at 19,795. Remember, 19,800 is where the bulls are battling the bears in terms of strength. And let's now look at how prices are structured in the index heavyweight segment. First of all, in the green is HDFC Bank, 0.2% higher, 1525. We are looking at Reliance, 0.5% lower, 2385. And let's pay attention to Infosys, down 0.5%, 1440. These are the three index heavyweights, and they discuss and make up the trend of the Nifty during the day. Now, what else is in the red? Bajaj, it's ICICI Bank, 0.5% lower, 917. I'm very keen to look at what Axis Bank is doing. It's flat at 1001. They had an analyst meet. A lot of positive reports coming in from that particular space, but for the moment, it's 1001 and flat at about 0.2% higher. Bajaj Finance, somewhere around 200 DMA, is getting some kind of traction, 0.5% higher, 7114. Tata Motors, because it's the selling parent of Tata Technologies, in the IPO that is open in the market is at a fresh record high, 0.5% higher, 683.45. Let's shift focus to the FNO stocks and pay attention to the top gainers apart from index heavyweights. Lupin 1.8% higher, 1220. Britannia 4775, 1.5% higher. Cipla, this is a stock which we've discussed on the long side yesterday, 1193, 1.9% higher. Again, Naveen Fluorine in the green, 1.4% higher, 37.59. Exide, which catches Mayuresh's fancy, 284.65, 0.3% in the gains. Top losers within the FNO space, Divi's Lab, Indian Hotels, GNFC and Escorts are showing minor gains. One very quick look on the Nifty 500 in the pre-open trade. The Nifty at the moment is flat, 19,800 in front of you. Amongst the gainers, the names that I can take on air, Prestige 929, 1.4% higher. Credit Access 1.5% higher, 1675. And we have Radico Khaitan. Let's look at Radico Khaitan, 1458, 1.6% higher. This is how markets are at the moment. And as good a time as any to welcome Osho Kiran from the technical side. Welcome and good morning to you, Osho. What are the one or two stocks that come to your attention?
Very good morning. Well, looking at the overall trend, what we have observed from past 3 to 4 days, that overall the market has been gaining in the initial period, then it is having a very lackluster day throughout. But overall, there has been some kind of narrowing down of the range, because on the downside for Nifty 19,700, we are expecting to be a very strong support zone. And on the higher end, 19,900 is the resistance zone for Nifty. But looking at the yesterday's data, the derivative front, 19,900 and 20,000 strike prices have attracted the call writers. So that means there has been some kind of upliftment in the resistance zone. And on the downside, 19,800 is again a very crucial zone, because majority of the pileup has been seen on the put writing front on 19,800. So overall, our market is still in the slumber phase, and we will be awaiting for some kind of trigger to come out from the same. So overall, there will be some kind of, again, a range bound movement can be expected, because again, it will be having a very extended weekend coming ahead. So we are not very much optimistic that there will be a lot of traction on the buying front, but overall, the undertone remains to be on the bullish front.
What are the stocks, Osho, that look good to you as far as charts are concerned?
See, as of now, there are many counters which are looking very attractive. Auto space is looking very good. So from auto, I have a pick which is Ashok Leyland. Ashok Leyland is looking very promising as of now, because in the last 2 to 3 trading session, it has seen a consolidation breakout. So Ashok Leyland at current levels 178, 177.5 is looking very appealing. One should try to accumulate it with a stop loss of 175, which is a very strong support zone. And in the near period, we can expect approximately 182 to 183 levels on the short front. And again, talking about one of the FMCG space is again gaining some traction, because majority of the counters are near the strong support zone. So Pidilite industry is gaining some kind of traction around the zone of 2,500. Also, it has formed a inverted head and shoulder pattern. So it is looking very attractive. 2510, 2500 is the range where one should try to accumulate this counter. On the lower end, 2440 is a very strong support zone. So we are not expecting that it should breach those zones on the lower levels. And on the higher end, 2580, 2600 is the target that we are expecting in the short term period.
Okay, absolutely. These are some of the stocks to watch out for. And Shail, I started my first show, Technical Gupshup, and that was with Osho. So Osho was the first technical expert that I had. So welcome, Osho, once again on BTTV. Always good to have you. And now talking about some of the buzzing stocks, some of the top gainers from yesterday's trading session, we had Bajaj Auto, Hero Moto, Aisha Motors. What are your thoughts on these auto names? I mean, where are these stocks headed in the near term, according to you?
Good morning, Tanya. First of all, thank you for having me again on your show. So, as you have said that auto companies are looking very positive, so I am with the trend because as a technical analyst, one should follow the trend. And looking at the overall chart of overall auto space, majority of the heavyweight companies are looking very attractive even at current levels also. So the strong pick that one can expect is from TVS Motors, because TVS Motor has seen a very strong gap up opening in yesterday's session, and it has sustained on the higher levels throughout the session. So overall, there can be some kind of initial profit booking which we might witness in the opening bell, but overall we are very much optimistic on the auto counters and expecting for TVS that we can see a figure of 1800 in 1 to 2 trading sessions. But again, why I'm not being very much optimistic for as of now at the opening, because of the extended weekend, and I am not feeling that there will be much of buying traction that can be seen in the market. But overall, the trajectory remains on the bullish front, and any dip should be acting as a very strong support zone and should augur very well for the bulls. So one should try to accumulate the auto spaces on any minor dips for a decent upside movement of 2 to 3% in coming 1 to 2 trading sessions.
All right. Let's get Mayuresh into the conversation as far as ABFRL is concerned. A very strong move coming in yesterday on this retail player from the Aditya Birla stable, Mayuresh. And it's been one of those very, very few underperformers that we have in the mid-cap space. What would be your view on the longer term for Aditya Birla Fashion?
I think the discretionary spending patterns are definitely changing, Chelsea, and probably what you're probably looking at metro areas are now starting to creep in tier 2, tier 3 cities as well. So the presence that ABFRL has, the kind of brands that they probably own, and the expectations in terms of more expansion happening in tier 2, tier 3 cities, I think that is where the next leg of growth will come from. You've probably seen its peer trend do exceptionally well in terms of numbers. And in my opinion, I think if you've got a structural view over the next 3 to 4 years, as these spending patterns evolve even more, and with the kind of mix that they probably have, I think this should emerge as one of the key themes as far as consumer spending is concerned. So yeah, I think the longer term view probably remains positive.
Right. What do the charts for ABFRL tell you, Osho?
See, overall, ABFRL has been in a corrective phase till now, but looking at the recent development, because it has retracted from the lower zone and has tested the 200-day SMA. This is the second time that it is testing the 200-day SMA. So overall, technical parameters are likely to have a very kind of reversal kind of a pattern from here onwards. But again, I will be waiting for 1 to 2 follow-up buying sessions, because looking at the overall cluster of moving averages, still the short-term moving averages are hovering below the 200-day SMA. So I'm expecting that once there will be a positive crossover on the technical charts, which is likely to be seen in next 1 to 2 trading sessions, if there will be a buying traction in this counter for the coming period. Then from here onwards, one can expect a strong reversal kind of a signal in ABFRL. As of now, the immediate resistance is placed around the zone of 230 to 235. So once there will be any decisive breakout from the zone of 235, it can attract a lot of buying in the counter, and one can expect 265 to 70 in the short-term period.
Okay, absolutely. And what about some of the sugar names, Osho? The companies, the stocks were on a roll yesterday on expectations that prices would firm up on supply shortages going forward. Any stocks that you like for the near term, and will the momentum continue going forward as well?
See, overall, if I'll be talking about the leading company, Barlampo Chini, then it has seen a very strong positive trajectory in the current financial year. It is hovering in the zone of cycle of higher highs, higher lows. And in the last 3 sessions, it has even surpassed the previous swing high, which was near approximately the zone of 445, 448. So that means as of now, this level is likely to have a very strong support in the coming period. And on the higher end, one can expect a target of 500 in the coming period. But again, from 445 to 470, it has gained a lot of buying in the last three sessions. So there can be some kind of profit booking or cool off in the counter. But on the lower end, if the stock comes down towards the zone of 450 or 55 odd zone, then one should try to accumulate for the immediate upside target of 480 to 500 levels.
Let's take Osho's view on the two stocks that Mayuresh has suggested fundamentally on the long side. To you, Osho is Exide Industries. The price that we see is 283 rupees. The counter is up 53% over 1 year and is ready to take out its all-time high that we had seen in 2018. What are the charts telling you?
See, overall, the overall counter is looking very positive because on the broader time frame, it has seen a very strong formation breakout of flag pattern. So overall, the target for this counter comes nearly 320 to 340 in the medium term perspective. But as of now, because there has been a strong traction from the zone of 255, 260 zone towards the 285 levels. So on immediate basis, there can be some kind of hesitant move around the same levels because of two conditions. One, 300 being a psychological mark can be acting as a very strong resistance. And second, as you have mentioned that it is on the 52 weeks or all-time high breakout level. So this can be seen as a very strong resistance zone as of now. So any breakout above the zone of 295 to 300 will be acting as a very strong momentum or trigger very strong momentum in the counter. So overall, once it surpasses the zone of 295, one should definitely try to accumulate this counter for the higher target of 325 to 330. While on the downside, if there will be any dip towards 280 or 75, that should be attracting buying traction.
Okay, absolutely. And what about CESC Osho? Because experts are also bullish on this particular stock because of the turnaround of power distribution businesses. But what do the technical charts suggest? The stock is at record high at this point in time.
Can you please
CESC Osho.
CESC, okay, just a second.
Yes.
Just a second. CESC, see again, technically it is looking very positive as of now. It has gained a lot of traction from the zone of 92 and hovering near the zone of 100. But again, 100 being the psychological mark, and also the counter has entered the overbought territory. So there can be some kind of profit booking or cool off that can be seen in the counter. But overall, this counter is looking very positive. On the formation front, there is a very strong support zone around the zone of 94. So any dip towards 94 should be acting as a very strong support. On the higher end, sustainable buying above 100 zone should be acting as a very strong trigger for this counter to have a continuation in the upper run. So 100 and above will be attracting buying traction for immediate target of 108. And once it sustains above those zones, then from there onwards, we can see the continuation in the uptrend.
Right. And with that, we'll start the opening quotes on the market on this lovely Friday morning. The Nifty is opened 20 points higher, 19,825. A 50-point uptick on the Nifty Bank, 43,620. The Nifty IT index is flat, but the Nifty 500 index is showing a decent uptick of 37 points, 17,675. Let's look at the index heavy space. I just need to look at HDFC Bank flat, 1522. How about ICICI Bank flat again at 922.75. Infosys flat, 1447. And how about Reliance? Reliance again is flat, 2394. Nothing happening in terms of the index heavyweights. What is the top gainer in terms of the index heavyweights? Axis Bank. This is something that we have to look at in great detail. Very, very strong commentary coming in from the analyst fraternity after the bank hosted them yesterday. 1002, 0.2% higher. Bajaj Finance, 7091, 0.2% higher. That's as far as F&O is concerned. That's as far as index heavyweights are concerned. The FNO space is now looking good. Let's look at the top gainers. Cipla. This is something that we had discussed. The 1200 call is what you need to pay attention on. And 1195 up 2%. This is the top gainer in the FNO. Remember, yesterday the counter lost 8%. Lupin, Lal Pathlab, Aurobindo Pharma, Granules. These are the top 5 gainers amongst the top 7. So it's going to be a pharma day, light, left and center. NMDC 174.60, 1.2% higher. As also Deepak Nitrite 22.29, 1% higher. Let's look at top losers. HPCL, Balrampur Chini. These are mild downticks. Balrampur Chini is something that you need to look at on the long side. NSE 500, let's look at the all-time highs in initial trade. Praj Industries 621.60, CSB Bank 379.35. Both have been discussed yesterday. Aisha Motors 38.92. This is a fresh high. TVS Motors and Bajaj Motors, all three of them in fresh high territory. What else is sticking as far as the top gainers are concerned in the NSE 500? Insurance is buzzing. NIACL 184.70, 6% higher. We have, okay, let's look at Union Bank 2.3% higher, 108.6, as also Vijaya Diagnostics 2.5% higher, 599.50. Fairly decent opening, 18 points higher, 19,822. To you, Osho first. Anything that catches your fancy in the cash segment?
See, as of now, again, I'll be waiting for the 15-30 minutes to market to get settled down. Then I will be having a strong view on which sector is looking positive. But as of now, there are some strong sectors that has been carried forward the positive momentum from previous day. Like Gujarat gas is looking very positive as of now, and it is likely to gain traction in today's session also. So there are some of the counters which are looking very positive. And I'll be waiting for first 15-30 minutes so that there will be the volatility to slumber down, and then again we can see a decent up move or decent sideways movement in the market.
Okay. Mayuresh, anything that catches your fancy in the early part of trade?
I think a few of these capital equipment companies can probably be looked at, Shail sir. Sangvi Movers is something that we have both in our suggested long-term portfolio picks as well as in our Diwali picks as well. The belief here is that the kind of capacities that they have added, specifically the high tonnage cranes, and the kind of activity that is expected over the next few years, I think that should be incrementally very, very positive with very strong traction on margins. And leverage not being excessively high on the balance sheet. So this is something that investors can probably look
at. Okay. This is how the markets are at the moment. 9:20. Tanya, just a moment, please. We are at 9:20, and let's look at how the other stocks are reacting. I'd like to see the Cipla 1200 call PCR if you can fire it. This is something that we had checked in the initial part of the market yesterday as also late evening. Osho, your view on Cipla?
See, after the recent fall, yesterday's fall, there can be some kind of breather that can be seen in the counter. But overall, because after forming such a strong pattern and such a long correction afterwards, it can attract some kind of breather or some kind of consolidation that can be expected in pharma companies overall. So as of now, I won't be advising to have any options to look for the options front, but in the cash segment, one should definitely try to look opportunity in Cipla, because after 7-8% of correction, there can be some kind of buying traction that can happen. But looking at the options front and the nearby expiry, one should basically avoid from the F&O segments.
Okay, absolutely got that. And let's discuss Union Bank of India also. And Osho, I'll come to you for a quick technical check, but Mayuresh, coming to you first. So ICRA has upgraded the credit rating of Union Bank of India to AAA and revised outlook to stable from positive. How do you see this development, and what are your thoughts on this particular counter?
So, Tanya, I think rating agencies come a little bit like in the movies, right? When everything is over, the cops come in. So I think a lot of balance sheet dynamics have already happened in terms of the move for a lot of these PSU banking stocks. And I think the rating upgrade is a positive sign. But a large extent is somewhere where capital adequacy is going to be extremely important over the next few quarters. With new rules of RBI kicking in and the expected loss provisioning as well, any of these mid-tier banks which lag a tad bit in their overall CET1 ratios will not be meaningfully be expected to have a expansionary loan environment. And with that, I think the restriction that probably happens in their overall earnings profile can probably come through. And that is where the concern of the street probably lies at this point of time. From a valuation perspective, there are no issues. Union Bank, Bank of Maharashtra, Indian Bank are all probably looking good. Asset quality pressures are coming off. But as we enter into this phase and with all these aspects into consideration, my own sense is that they will be stuck in a range bound move, at least for some periodicity.
Okay, absolutely. No valuation concerns. But coming to you, Osho, now for Union Bank of India, the stock is in the green today. 108.15 is the level where we are at. Where is the stock headed in the near term, according to you?
See, overall, the trajectory for Union Bank remains positive. Overall, looking at the recent development, there has been a cycle of higher highs that can be seen in this counter. And post the correction from the zone of 115, this can be seen as a very strong reversal in this counter because it has reversed from the 21-day exponential moving average. So one can expect that yesterday's lows of approximately 105.50 should be acting as the immediate support zone. And on immediate basis, again, 114 to 115 levels can be seen as the target or resistance in the near period. So overall, from here onwards, risk reward ratio is looking very attractive in this counter. And on the higher extent, we can expect 114 and 15 to get tested in this counter.
Okay, let's look at stocks that are buzzing very, very smartly in trade. The PCR will fire New India Assurance Company Limited, NIACL. Huge block deals happening. And along with NIACL, you see GIC Ray. These are both government insurers. Over the longer period, they have destroyed a lot of shareholder wealth, but are coming back very, very strongly. To you, Mayuresh, we've seen a very, very sharp run up in both these counters. Is it just momentum that is driving them, or anything that catches your fancy on the fundamental side in NICAEL and GIC Reinsurance?
I think it is more momentum at this juncture, Shail sir, because I think they're very tough businesses at this juncture. Reinsurance rates need to see a persistent uptake, which probably does not happen over a longer periodicity of time. And even on the general insurance part, I think a lot of de-risking is happening when it comes to the portfolios of these insurance companies as well. So a lot of the private players like an ICICI Lombard have clearly skewed away from the farm insurance part. And where the high value businesses, I think the competition intensity is probably high. So I think auto insurance as an example, hull insurance, marine insurance, fire insurance, are all spaces which are getting very competitive as we speak. So I think more momentum play at this juncture, but a consistency uptick in earnings probably get restricted because of most of these factors.
Okay, so this is the fundamental view coming in on the two government insurance players. They are buzzing on the screen, but they've rallied over the last 7 days, and we are into an extended period of holidays. No point taking a technical check. But still coming to you, Osho, on Paytm. A very smart move, and this is accompanied by a huge block deal. 1.57 crore shares have changed hands, and the volume today is the highest since early June. What is your chart check on Paytm telling you?
See, Paytm again has been gaining traction in the current financial year. So overall, the technical chart for Paytm still looks attractive at current levels also. So here onwards, one can expect, because it is hovering just near the 50 and 21-day exponential moving average. So from here onwards, one can expect the uptrend to continue. In between, there can be some kind of hiccups, for which 840 is to be seen as a very strong support zone for Paytm. And on the higher end, 960 to 980 is the first resistance that can be seen in the coming period. but once it breaches the levels of 980, then from there onwards, it can even enter the zone of 1050, 1060 in the coming periods.
Okay, absolutely got that. And one stock that I want to discuss right now, Shail, is Cochin Shipyard. You were discussing this stock yesterday as well. It was on a roll yesterday, and today also it's trading in the green. The momentum continues. Coming to you, Mayuresh, for Cochin Shipyard. I mean, what are your thoughts here? Will the momentum continue going forward as well?
I
It's
perfectly.
already a multi-bagger stock.
Oh, absolutely. I think the momentum just continues. The order book is
Hmm.
very, very robust as we speak. So it gives a huge revenue visibility over the next 3 to 4 years. The execution and the profile change that you've probably seen, both from the repair business as well as the building business, the margin should show us a stable uptick in the next few quarters as execution improves. And the best part probably is that more orders will keep on coming its way. So I think as capacities increase over the next few quarters, with expectations of stable execution and better margins, that leverage component obviously gets played off. But you're absolutely right. I think the move has been stupendous. It's a late stage base as we see at Markets with India, and valuations also a tad bit on the higher side. So yeah, any investors holding on can probably ride the momentum, but please keep your risk management practices in place as we always.
Absolutely. And coming to you, Osho, also for Cochin Shipyard and Zomato as well, because we discussed Paytm and Zomato is also trading in the green as we speak, and the momentum continues here as well. So, first, your quick technical check on Cochin Shipyard and then Zomato.
Okay. Cochin Shipyard, as you have already discussed, that it is at a very lucrative price also on technical fronts perspective also. It has been hovering above all the exponential moving average. So overall, the technical setup still looks robust. And from here onwards, one can expect 1200 on an immediate basis to get tested in Cochin Shipyard. And once it breaches the levels of 1200, then from there onwards, it will be continuing its uptrend towards the zone of 1250 to 1260 in the coming period. And on the downside, a strong support zone or a strong demand zone is present near the zone of 1050, which is also the 21-day exponential moving average. So on the downside, near about 70 odd points. On the higher end, we are expecting again 80 to 90 points of gain in this counter. So overall, it is looking very positive, and there will be a gradual up move. It's not that all of a sudden it will be gaining traction, but on a gradual basis, it will be having a very strong momentum in the coming period. Now coming to Zomato, again, Zomato also is having a very decent uprun in the current financial year. And looking at the overall technical setup, it is just hovering near the 21-day exponential moving average. So overall, the setup for Zomato is still very positive on the medium term time frame. On the downside, the immediate support or a very strong demand zone is present around 105 to 110, which is having a bullish gap on the technical charts on the daily time frame. So 110 is the zone where is the higher end of the bullish gap is there, and from there onwards one can expect the upward rally or the buying traction in this counter. And on the higher end, 125 is the first target or the first resistance. Once it breaches the levels, then from there onwards again 15 points of higher movement can be expected. That means 140 should be the target from short to medium term in Zomato.
Okay, let's look at the broader markets. We are now bang at 9:30. The first 15 minutes of trade has happened. So the institutional folks have more or less decided what the trend will be for the rest of the day. Let's start with the advanced decline ratios on the National Stock Exchange. At the moment, 400 stocks are in the green and about 430 are in the red. So the advanced decline ratio is firmly in the quarter of the bulls, 3:1. The pharma index is the top gainer, 1.2% higher, 16,000. This is a fresh record high for the index, and anything and everything in pharma is in green, whether it's Lupin, Dr. Reddy's, Biocon, Sun Pharma, Cipla. So either it's mid caps or it's large caps or even high beta like Glenmark and Aurobindo Pharma, all in the green. We track 19 indices for you. Out of those 19, 18 are in the green. The one that is down is the Nifty IT index, which is just flat, 75 points lower, 32,300. Let's just shift focus on stocks that are now moving. Coming to you, Osho, the chemical space, Naveen Fluorine and Deepak Nitrite. Long-term charts show a lot of strength when it comes to the chart structure after a very major decline. What are your favorites in the chemical space? Which one of them looks good for a nice medium-term punt on the long side?
See, as of now, we are having a very strong traction in Naveen Fluorine from last trading session, because Naveen Fluorine, again, after the correction from the zone of 4,500, it has went towards the 3,400 odd levels. And from there onwards, it has moved upwards and consolidated in a very narrow range. But the positive development which we have seen in the last two sessions, that it has seen a very strong consolidation breakout that was backed by strong volumes also. So from here onwards, this counter has the potential to move a bit higher, not very strong targets as of now, but on the higher end, 3,800 is the first resistance. Once it breaches the zone, then we can expect 4,000 to get tested in Naveen Fluorine. So overall, this counter should be kept in the watch list and should be even accumulated from short-term perspective for immediate upside target of 4,000. But coming to the chemical space, there are n number of counters which are looking very attractive because there has been a decent correction in the overall space. So even the large cap companies like Tata Chemical and SRF is also looking very positive from short to medium term time frame.
Okay. Mayuresh, to you, anything fundamentally that has changed in the chemical sector? I know a lot of technical charts now speak for an upturn, or at least the bad phase that we've seen over the last 18 to 24 months get over for the chemical sector. What catches your fancy as far as the sectoral changes have happened, and any picks that look good to you fundamentally that you can share in the chemical sector?
So I think a lot of Chinese dumping which was happening over the last few quarters, a large part of that is largely over. You've seen a lot of destocking that was happening across the space when it comes to Europe or even North America to a large extent. And therefore, a lot of these commoditized chemical companies took a huge beating, both in terms of volumes and realizations for both these factors at play. Having said that, Shail sir, I think over the next couple of quarters, I think a lot of bottoming out process in terms of earnings will largely happen. And the first half of the next year is where a huge revival will take place. Add to that the backward integration capacities that a lot of Indian players are adding. And China plus one remains a structural theme for a lot of our niche chemical making companies. A couple of stocks on our buy watch list. One is Neogen Chemicals. The company, basically, a large part of it goes into agrochemicals as its specialty, as a niche itself. But they're getting big time into electrolyte salts and lithium ion battery capacity expansion as well. I think that is one which resonates well in terms with the entire EV theme as well. And valuations are looking far more attractive at this juncture as we speak. The kind of revenue potential and these capacities will come up over the next few quarters can be a game changer in terms of overall numbers and margins. The second one on our buy watch list is Sully Engineering Polymers. And again, I think the company has announced a significant expansion of its ABS capacities from 75,000 tons, almost to 145 over the next 3 to 4 quarters. They're running at full capacities as we speak. The expectations in terms of realization growth should be relatively better. The second aspect in terms of applications that ABS has in textiles, in automobiles, and consumer discretionary products, including TP panels, fridge, and again, mirrors as well. I think that becomes a huge game changer because we are a large part of an importing economy as we speak for ABS. And as these capacities come on stream, it will be a first mover advantage in terms of huge and humongous volume growth reflected both in price as well as margins. It remains a zero debt company and valuations still remain extremely attractive. I think a couple of these stocks should definitely be on their valuations.
Okay, which stock are you talking about, Mayuresh? The second stock that you mentioned?
The ticker code is BEPL. It's a Bansali Engineering Polymers.
Okay, BEPL share. Okay, absolutely. And Mayuresh, I want to discuss PSU space with you as well. Yeah, Shail, you want to say something?
No, Tanya, please go ahead. I had missed the name of Mayuresh's second pick. Please go ahead.
Yeah, it was BEPL, Shell. So I was saying this PSU space, Mayuresh. So experts say that people are buying momentum and PE expansion, and valuations are also attractive. But if we see today as well, some of the stocks still, the momentum continues in this space. Look at BHEL, NMDC. So what are your thoughts on PSU space? Any stocks that you still like at these levels?
So structurally, I think has done exceedingly well, and to a large extent, the kind of moves that a lot of companies within the space generate are dependent in terms of how government policies and regulations move around. And to that extent, the expectations as far as the defense space is concerned, as an example, more orders will flow in. Structurally, I think power is looking very, very good with more orders flowing in on the renewable side of things. So to a large extent, the kind of expectations that have now got built up structurally seem to be well placed and well poised. However, valuations seem to be a little bit on the higher side. I think the best way, if somebody wants to play this, is just go and do a SIP in the PSU CPSE index. I think that's the best way to probably play any of this structural story.
Okay, got that. And thank you so much. Thank you so much, Mayuresh, on that wonderful note. And thank you for your time. And thanks again for being with us here on BTTV.
Thank you so much, Tanya Aneja. Always a pleasure.
Okay. So coming to you, Osho, now for these PSU names, like say, let's discuss BHEL and NMDC, the top buzzing stocks from this space today. What are your thoughts and any stocks that you like for the near term?
See, as of now, talking firstly about BHEL, BHEL has been gaining traction and it is having a very lucrative zone. But we have to be maintain caution in BHEL because from the technical point of view, the counter is entering the overbought territory, and once again the 150 zone will be acting as a very stiff resistance. So one should be maintaining a caution approach, and a fresh breakout above the zone of 150 will be only attracting buying traction in this counter. Overall, the space is looking very positive. There can be some kind of positive traction also, but on the downside, one should try to utilize the dips, which is basically near the zone of 138 to 140. So this is the zone where one should try to accumulate this counter. On the higher end, 150 should be acting as the target or resistance. For fresh breakout, we should we should wait for 150 to get breached on a very strong note. And from there onwards, we can expect 15 point of higher movement in BHEL in the coming period. Now, talking about NMDC, NMDC again is having a very strong setup and it is forming a higher high, higher lows pattern. So one should try to gauge the momentum on the higher end. From here onwards, 180 to 182 is the immediate target that one can expect in NMDC. And again, from short-term view, from overall medium-term perspective, the stock has the potential to test the zone of 200 also.
Okay, these are the stocks that we are discussing from the PSU stable, and they have shown very, very strong momentum as far as prices are concerned. Let's mark another stock that Osho had highlighted, and that's TVS Motors, a fresh record high, and now the stock is firmly in the 1800 rupee trajectory. 3 days of consistent gains, and at this point about 2.9 lakh shares have been traded. This stock has rallied consistently month on month from March onwards, which means April to November, that is a period of 7 months. So you have 7 monthly green candles. The stock was at 1089 at the base of April, and now 1812, and there is still no let up. So this is some kind of a fresh move that is coming into TVS Motors. Let's do other chart checks. GIC Ray 285.50, strong block deals happening. NIACL again up during the day for the 6th day in a row, strong momentum happening there. Osho, to you, I'd like to have a view on JSW Energy. You've mentioned CESE. Mayuresh has also mentioned that. What are the charts of JSW Energy telling you? 424 in front of you.
See, JSW Energy is looking very positive as of now because it has consolidated at the higher levels of 21-day exponential moving average. And again, after forming a rounding bottom formation, it has again gaining traction on the higher end. So from here onwards, on immediate basis, one can expect 445 to 450 to get retested in this counter, because in the recent movement, in the recent buying traction, we can see that the volume has increased on the little front. So from here onwards, one can expect the uptrend to continue towards 445, 450 on immediate basis. And on the downside, we are having a very strong support zone near the 410 to 405 odd levels. So overall, the trajectory remains bullish, and a fresh breakout above 450 can again give a positive thrust in this counter for 45 to 50 odd points from there onwards. So overall, as of now, 450 should be seen as the first target. And once we see a sustainable buying above 450, then 490 can be tested in this counter.
Okay. Let me just mark some other stocks which are now moving fairly strongly. It's LIC of India that is now moving in sync or after the rally that we've seen in NIACL and GIC Ray. Remember, it's the biggest insurance player in India. I'm talking about LIC of India. Let's just see what the price is. 624 is what I checked yesterday, and it's breaking past its 200-day DMA, 633 today. The all-time high on the stock was happened in the first month of lifting, which is 915 rupees. So it's the biggest player in the sector which has now started moving. Remember, all of this week and the previous week we had seen private insurers, then the rally went into public insurers, NIACL and GIC Ray, and now it's LIC that's moving the muscle. Your views on LIC Osho 631.50, decent prices at the moment in terms of the blocks that are happening.
See, overall, LIC has seen a positive crossover in the month of July, and that was the low of approximately 610. Again, it has seen a very strong move towards 650 and again corrected towards the same zone of 610, 600 odd levels. And from here onwards, again, it has consolidated and started witnessing an uptrend. So from here onwards, one can expect that 600 is a very strong demand zone for this counter. And on the higher end, one can expect 660 on an immediate basis, followed by 700 odd levels from medium-term time frame. So overall, LIC is looking very attractive at current levels. From risk reward point of view, it has already seen a very decent up move in the last two trading sessions. So overall, one can expect 660 in the coming period, and overall 690 to 700 should be acting as the hurdle for this counter in the medium term time frame. But overall, as you have mentioned, that it is the one of the biggest player in insurance companies. So from here onwards, one can definitely place their bet in LIC, and one can have a very decent returns on their investment in from short to even medium term time frame.
Okay, with that, Osho's time with us draws to a close. Thank you, Osho, for the wonderful picks that you shared, especially TVS Motors and Pidilite. We'll keep that on our forefront, and we are hopeful that you will join us soon.
Thank you.
With that, a very quick break, and on the other side of the break, it's the management of Flair Writing, the IPO that is attracting quite a few eyeballs on Friday. We'll be joining by then.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-risking the Future in collaboration with Business Today.
Welcome back to Market Today, and let's shift gears to our corporate radar section. And with us are two gentlemen from Flair Writing. This is the IPO which is open in the market. We are joined by Mr. Sunil Rathore, who's the whole-time director for Flair Writing, and also Vimal Chand Rathore, he's the managing director. Just a few details on Flair Writing. The IPO is worth 593 crore rupees, in which the fresh issue is for 292 crores and the price band is 288 to 304. Welcome, gentlemen. A very warm festive greetings to you, and I'm sure it's one of those wonderful days for Flair's management to be thinking back in time and reflecting on how this IPO will pan out. To you, Sunil, first, what are the issue proceeds being used for, and how does that help Flair in the longer term? Are you going for capex or are you paying off earlier loans?
So first of all, thank you for having us. And it's a combination of both, like you said. So out of the total proceeds, if you see, 143 crores is for brownfield and greenfield. So that is more or less to increase the capacity that we want for the near future. 43 crores is for repayment of the loan. 77 crore is for the working capital, and 29 crores is a part of the GC group.
Okay, absolutely got that. And good morning, gentlemen. This Tanya this side joining in the conversation. I want to understand from you that what could be your revenue potential like going forward, because from 2017 to 2023, you have been growing consistently at a CAGR of 14%. So I want to understand from you that what's the outlook going forward, and what could be the major growth drivers going ahead?
The major growth driver will be the domestic sales as well as the export market. And we are entering into the new business of steel vacuum bottles, which will also give us a very substantial revenue. Last year we did a turnover of 953 crores with a EBITDA of 183 crores and a PAT of 118. And we are confident that in future also we will be continuing the same growth pattern what we did previously.
Okay, absolutely. And Sumit, you're also adding an entire vertical, that is steel bottles. So how much more will be the revenue addition from that vertical going forward?
So steel bottle as an overall as a company, if you see like mentioned 950 crores that we did. So on average and totality, we are expecting an overall revenue growth of around 15%. So stainless steel bottle is fairly new, and we will be entering this market in the domestic as well as the export market. And going forward, we are expecting, and it fits into our policy of a decent top line and a bottom line. So going forward, we are expecting it to have a help us in the 15% revenue growth.
Okay. To you, Vimal Chandji, Flair has been in the segment for exports over the last many decades. What, according to you, will be the growth drivers over the next 3 years? You have somewhere like 9.5% share of the pen writing market in India. Where is this headed over the medium term?
Yeah, in export, we started the export business in 1980, and consistently we are the largest sector from India. We are exporting to 97 countries, and because of the China Plus policy, we are quite confident that in future also we will be able to penetrate on the export market in the bigger way.
Okay. Sunil, this comes to you. When you look at the valuations for the IPO at the moment, of course, it's priced at about 304 rupees. This brings to a PE of somewhere like 27 and a price to book of about 4.2 times. How do you see yourself when you compare yourself to the industry peers such as link pens?
So I would say, if you see overall as a industry, we believe that we have come at a very fair valuation of 24 times, 27 times trading numbers as compared to our other industry players. So going forward, I think this will fairly attract the investors, and we believe in the system as a policy that everyone who is attached with Flair should always be on the positive side of the books. So going forward, we always would like to maintain that strategy.
Okay, absolutely. And Sumit, we were talking about export market. So if you could tell us about your biggest international clients, and also, this is a fairly competitive industry. So how are you going to maintain your margins going forward, and what's the outlook for FY24?
So if you see, we, like mentioned, we are exporting to more than 97 countries, and US, UAE, Colombia, Japan. They are some of our key markets. And one of the key things that we have adapted is, along the years, we have tried to, as a made in India concept, we have tried to, promote our brands in the international market as well. When it comes to the bottom line, since we have, economy of scales, and we have, always control on the bottom line, and our manufacturing capacities or facilities are more or less fungible for domestic and export. So overall, as a bottom line, we have historically also maintained, our EBITDA or PAT, and going forward also we would like, and we are quite confident that we will be maintaining on the same levels.
Right. Sumitji, if you look at the offerings that Flair has in the market, there is intense pricing pressure, as Tanya mentions, and the price points are anywhere between 7-8 rupees to 15 rupees. What is the volume? I mean, how many pens does India buy on a regular basis in a year? And where is this volume specifically for Flair headed?
So if you talk about Flair in particular, we are like, we have overall as an industry, we have 9% market share. But if you talk about pen itself, we have 18% market share currently. Our current capacity is 200 crores pens annually, out of which last year we utilized 130 crores annually. So per day capacity, if you see, we are doing almost 65 lakhs. So that's quite a high capacity that we have. Going forward, since we are already building the capacity, we are expecting it to be around 220 crores pens annually. That is where we plan to take our facility in the coming years.
I want to add something. Our biggest distributor.
And I must share. Ji Vimalji, please continue, sir.
Sorry, just I want to add that our biggest strength is the distribution network. We have got 7,750 distributors and more than 3,15,000 retailers. So because of this, and we have got 900 sales force within our range. So because of that, we are quite confident to be able to distribute whatever we produce.
Okay, and to this I'd like to add a point that more than 2,000 there are more than 2,000 cities and towns in India where the Flair writing instrument, as we call it, the pen, is easily available. And I'd like to share an aside with both Sumitji and the senior Mr. Rathod. For about 20-25 years, I have just used one single pen, which is the Hauser, and I buy in quantities about 10 to 12 at one point of time, and always at all points of time, for Tanya and me, this is our weapon of choice, and it has often said that the pen is mightier than the sword. With that, Sumitji and Mr. Rathod, our best wishes to you, sir, and for the successful completion and a phenomenal listing of Flair writing.
Thank you very much.
Thank you so much for having us. Thank you.
With that, ladies and gentlemen, we'll take a very, very quick break. And at the moment, the Nifty is absolutely flat at 19,800. And on the other side of the break is waiting Mr. Keshav Bhajanka. He's the Executive Director of Century Plyboards. We are going to talk about earnings. We are going to talk about how the future looks for this particular company. Stay tuned.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back to Market Today, and with immediate effect we'll join Mr. Keshav Bhajanka. He's the Executive Director at Century Plyboards. A lot of numbers would be running in front of you in form of graphics. Just let me highlight two. As far as the profit is concerned, for the second quarter that's gone by, 97 crores versus 87 crores in the first quarter. And in the same quarter last year, it was 95 crores. Revenue at 966 crores is higher by about 70 crore rupees as far as the first quarter is concerned. And in the same quarter last year, it was at about 908 crores. Welcome, Mr. Bhajanka. How do the next 1 or 2 quarters look to you when it comes to demand for plyboard? Yesterday we had a very fine gentleman from the real estate space, and they said that there is no let up in demand. So if flats and residences are being constructed at a very brisk pace, the future looks brighter for Century Plyboards. What's your view?
Hi, good morning. Thank you so much for having me on the show. I think you're absolutely correct. If we look at the medium and the long term, the future looks very bright. And if you look at the current scenario, today there is some pressure on demand. The reason there's pressure is because most of the inventory that was there in the system in the form of residential flats has been consumed. Today, I think we are at a 6-year low with regards to the unsold inventory, so to speak. And the new launches do take some time to catch up. So our journey starts when you go to the process of making it from a house to a home. It is not during the early stages of construction when the building is being made. It is when you are actually furnishing it and turning it into your own home. So I think that lag does come into play. But despite that, we have had a very strong quarter. I think, in the plywood and the MDF segments, we have been able to work as per our guidance. Laminates, yes, there has been a slight miss, but we are working towards correcting that in H2 as well.
Okay. Keshavji, when you look at the broader market, especially the real estate space, we've seen a very, very high demand coming in from the luxury segment. Your buyers, which are in the OEM space for retailers, as also retailers like us, are facing this challenge of trying to sort of arrange for funds to buy larger and more luxury homes. What has been your interaction with the retailers? When you look at newer products to be launched, what are the kind of margins that you're looking at? At the moment, 9.6 is what you make.
So, on margin levels, we always speak on a beta basis. And our objective has been clear. In plywood, we are looking at 13 to 15% long term, laminate 14 to 16%, and MDF and particle board 25% long term margins. Having said that, today, if you look at the scenario, everyone who can afford a larger home is trying to purchase one post-COVID. But I think this trend will take some time because it is not necessary that everyone has the necessary liquidity. This, coupled with the fact that interest rates have jumped, make the current scenario slightly tricky. But I think that going forward, once interest rates start to cool down, which hopefully they will within the next year or 2 years, and the additional liquidity that will be built into the system due to the same, you will see a far stronger demand for luxury segments, and that is where we come into play, as you had rightly pointed out.
Okay, absolutely got that, Mr. Bajanka. Very good morning. And, firstly, let's talk about laminate revenues. That declined 2.5% on a YY basis with margin contraction of 619 basis points on an yearly basis. So I want to understand from you that what's the outlook as far as revenue growth is concerned? I mean, what's your outlook for FY24? And if you could also share, some of the major growth drivers going forward.
So you see, during the last 2 quarters, we have brought about a number of changes. We have launched a new campaign where we have partnered together with the renowned designer, Mr. Manish Malhotra, and we come up with a range that is the first ever of its kind in the entire laminate industry, where Century Laminate by Manish Malhotra is the first branded designer laminate to ever have been created anywhere in the world. Now, these things do take some time, and the expense has obviously been booked within the first 2 quarters. Alongside that, we have launched scenic laminates. As you know, in plywood, we have been very successful with our scenic brand, and now we are trying to replicate that same success within laminates as well. So, in the second half of the year, I'm very confident that we will be looking at a double-digit growth, and we will be in line with our guidance of 13 to 15% EBITDA margin.
Okay, and also, Mr. Bajanka, is laminate more expensive than the other brands, such as like Manish Malhotra?
Manish Malhotra is a category within our laminate range. So Manish Malhotra would be the higher end of our laminate range.
Okay.
Absolutely.
Let's take this discussion forward, Mr. Bajanka. It's I think the first instance in which the laminate is branded to a celebrity from Bollywood. What are typically the higher margins in terms of actual numbers that you charge on Manish Malhotra laminate versus the other brands that you offer?
So the pricing of the Manish Malhotra range would be double that of our standard range, and this is due to the aesthetic changes that we have brought in, which requires a higher cost of production as well. And alongside that, that brand premium will of course come into play. So I think that you can look at it as a 2x of the existing range of laminates that we are offering prior to this introduction.
Okay, absolutely got that. And let's talk about timber prices as well, Mr. Bajanka. What's the price trend there? Because we are seeing elevated timber prices. So do you expect the prices to go up going forward as well?
I think timber prices have cooled off slightly over the course of the last 1 or 2 quarters. Last quarter, definitely, we have seen timber prices more or less plateau out, and this quarter we are seeing that timber prices are slightly subdued as compared to last quarter. Having said that, I hope that timber prices do not cool off too much as well, because higher timber prices attract agroforestry. Today, a farmer who was earning a realization of 2,500 rupees per ton is earning a realization of 5,000 rupees plus. What that entails is more agroforestry, and it gives us long-term sustainable raw material security. So I'm hoping they do cool off slightly, but not much beyond.
Right. Mr. Bajanka, let's look at the capacity expansion over the next 18 to 24 months, and let's look at what is coming on stream as quickly as possible. So, one, how much of fresh capacity you are adding, how are you adding it in terms of costs, in terms of financing, and what is coming on stream over the next 2-3 quarters?
So the new capacity in Andhra Pradesh for both laminates and MDF will come on stream by the next quarter itself. We are very confident that we will be unveiling our largest MDF capacity in Andhra Pradesh, and the first capacity in HPL, in laminates that we have, that is higher size, within the next quarter. Alongside that, we are also looking at adding capacity in plywood within the next financial year, and adding a large capacity in particle board in Chennai within the next financial year as well. In terms of the total cost, you'll be looking at a 200 crore plus capex for laminate, 700 crore plus capex for MDF, 500 crore plus capex for particle board, and 100 crore plus capex for plywood.
Okay. Let's look at the financing costs that you are looking at. What is the average interest that you borrow on? And at the moment, I see that on the balance sheet, you have somewhere like 315 crore rupees of debt versus cash of about 45 crores. Any chances you want to pay off this debt early, or this is good enough for the size of the balance sheet that you have?
I think, we will have to take on some more debt over the course of the next year and a half, because of the quantum of expansion that we're doing. If you look at Century Plywoods, if you look at it historically, within the first 35 years of existence, we did close to 1,000 crores of capex, whereas over the course of the last 2 years, or this year plus the next year, we will be doing close to 2,000 crores of capex. So it is a change of scale. However, we are very confident that we have very strong internal accruals. So the debt that we do take on board will be a short-term or a medium-term debt, maybe for a year or 6 quarters. And post that, due to the internal accruals and due to our strong cash flow generation, we'll be able to repay this debt. So it's not going to be long-term debt, as you correctly pointed out.
Okay, absolutely got that, Mr. Bhajanka. But talking about imports as well, imports have gone up. And experts are saying that the company will be affected by sluggish demand environment and higher imports in the near term. Would you like to elaborate on that?
I think imports, you're predominantly talking about the MDF and the particle board segments. In MDF currently, we are a north-based company. Our production capacity is in the north, and the maximum quantum of sales is in the north. Now, the north is insulated from imports because MDF is not a very high realization per ton product. So the transportation and freight cost from south to north can vary anywhere between 10 to 15%. So it acts as a natural insulation. But I think going forward, once our south capacity comes in, imports will definitely affect us. However, having said that, if you look at the BIS standards that have been levied on MDF, which come on stream from February next year, imports will face a bit of a challenge. Growth of imports is unlikely to persist, and I am quite bullish that the quantum of imports is likely to reduce going forward.
Okay, and what about margins, Mr. Bhajanka? If you talk about plywood, laminate, and MDF, what is your outlook as far as margins are concerned? I mean, for FY24?
Our long-term guidance on margins has been that on plywood we'll do 13 to 15%, laminate 14 to 16%, and particle board and MDF 25%. I think that within the second half of the year, we'll be targeting the same margins for plywood. Perhaps laminates would be slightly lower at 13 to 15%. MDF, we'll be targeting at 25%, and particle board, because of the current demand environment, you'll be looking at 20%.
Okay. Mr. Bhajanka, when you look at how your capacity expansion is coming on stream, and as you mentioned, 2,000 crores in the pipeline, this of course has to be sold to reach retailers like Tanya and me. What is the geographical expansion that you are looking at, newer cities that you might want to add, newer dealerships that might want to host Century Plywood? What is that game plan towards the customer side?
I think, we have been the strongest brand in the industry for quite some time now. Being the market leader, when we do decide to expand footprint, it becomes somewhat easier than for the rest. If you look at MDF, if you look at the other capacities, plywood or laminate, it will be more or less consumed by the existing channel itself. It's about creating further demand levers, and I'm sure and confident that we are in line to do the same. For MDF, because it is a geographical location change and it is a change in focus from the north to the south, definitely we'll have to expand our retail channel, our distribution network in the south. But we are fairly confident and we've already started work on that. We're seeing good traction already.
Okay, and at least the final question from my side, sir. Of course, capacity expansion and geographical growth is a given as far as Century Plywood is concerned. Share with us and your investors the kind of hurdles that you are facing in expanding capacity and expanding geographical footprint. What are the pain points for the moment for Century Plywood as well as the industry?
I think the biggest pain point is that the cost of capex has gone up because of a sharp increase in raw material prices as compared to when we had planned it. But other than that, I don't see too much of a challenge in executing the current capex that we have. And going forward, in terms of distribution reach, I think we are very well placed. We are working on it already, and hopefully, we'll be able to give you and our investors substantial growth going forward.
Okay. With that, Mr. Bhajanka, you have our best wishes in terms of a better top line, finer margins, and of course, a fantastic bottom line. Just a point that I'd like to mention, over the last 10 years, the CAGR on the stock has been 37%. Each year, the counter has grown 37% in terms of price. And given the strength of the capex and the reach, we hope that wonderful rally continues. Have a good day, sir.
Thank you. Thank you so much.
Okay, let's shift back to focus on the markets, Tanya. Absolutely flat on the Nifty. It's waiting for the weekend as much as you and I. So 19,807, up just 4 points. The Bank Nifty is flat again, 43 points higher, 43,621. Let's do a very, very quick check on the top gainers as far as the Nifty is concerned. As of now, we are seeing a lot of traction which is coming into the two-wheeler space. It's Divi's Lab and Dr. Reddy's which are the top gainers, 1.6% higher on Divi's and 1% higher on Dr. Reddy's. Cipla is back in the game. Remember, this was a call that we took on the long side, 1200 option. If you are into it, it's not a good point to extend it over the weekend. It's just an intraday play. 1188, 1.5% higher. Top three gainers are pharma stocks in the Nifty. Then we have Sun Pharma coming up. Actually, top 8 stocks have 4 pharma names. Top losers: HCL Tech, Tata Motors, Britannia. Nothing to be worried about. They are just minor losses. FNO, top gainers. At the moment, Lal Patlab and Syngene. So it's the pharma tadka that's working fairly well on the FNO space also. Tanya caught BHEL. The counter is up 2.5%. 146.40. So that's the background on FNO as well as Nifty. Let's look at all-time highs. TVS Motors, NTPC, Colgate Palmolive, Eicher Motors and Bajaj Auto. This is from my side. Tanya, what are you watching?
Absolutely, Shail. I think it's going to be a pharma day today, and we have discussed all these stocks with Osho and Mayuresh and their picks as well. So I think with that, it's time for us to wrap up this edition of Market Today. But lots more coming up for you, so stay tuned, and many thanks for watching.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-risking the Future in collaboration with Business Today.